Welcome back. You're watching Trending Today. Now, MCX India has raised prices by 25% in the December quarter for the last fiscal for the non-agri segment. Price hike benefits were significantly witnessed in the March quarter. What does the road ahead look like for the company? Joining us on the show is MD and CEO of the company, Mr. Mrugank Paranjape. Mr. Paranjape, good to have you on the show. Let's start off with the volume growth trends that we've seen, the average daily volume growth trend as of now, till now in the June quarter. How encouraging does it seem to be?
So I think, as you know, in the Q3 post demonetization as well as Q4, we had a little bit of a drop in volumes. This was predominantly coming from the bullion sector, and as we get into the new financial year, we saw that April and May was probably amongst the lowest volatility seasons that we've seen globally in the commodity sector. So volumes did go down a little bit as compared to Q3, maybe about 5%. But as we saw 2 or 3 developments in the market, and the first one was the GST rate on bullion getting announced. Second, all the uncertainties around GST also getting stabilized. We are quickly seeing volumes build up both in the bullion segment as well as in the rest of the market. So in the first 8 or 10 days of June, our volumes are already crossed 20,400 crores on the average for this month. So if I may say, with the uncertainty gone, we are looking back to a very healthy number coming in July after GST comes in full force, because the bullion segment, which was a big contributor to our volumes pre October 1, or let's say pre-demonetization, is now also coming back in a big way. That is what we would see in terms of the volume trends for the next couple of months.
Right. Mr. Paranjape, stronger flows, higher liquidity as far as equity markets are concerned. Has it impacted commodity trading in a meaningful way?
Like I mentioned, I think the overall volumes in an exchange depend on the volatility in the market, especially in the segment that we are in. It depends on the base prices, and it of course depends on the opportunities. So to that extent, volatility in commodities being very low, base prices in some of the metals also going much lower than what they were in Q3 and Q4 of last year, coupled with, of course, a very, very high return that maybe people were getting in the equities market, did impact us initially in April and May. But what was very heartening for us to see was that in the very few days when there was good volatility, or when there was some events which was impacting commodity markets, volumes quickly came back on the exchange. So yes, very high returns in equities did impact us initially, but I think we are seeing the volumes come back now.
Right. Let's speak about different commodities severally. Now, while gold has remained in a broad range of $1,200 to $1,300 now on the COMEX, but there has been also an exchange rate movement, which has obviously, because of the rupee being stronger, there has been an impact on MCX prices as well. So what is the kind of trade that you have seen as far as safe haven buying and as far as gold pricing is concerned? Because now again, we are seeing a bout of resilience as far as overall pricing for gold goes, because it's holding out above $1,250 an ounce. Apart from that, even as far as crude oil is concerned, we've seen extreme volatility because of the OPEC meetings, and now we are seeing some kind of pressure that has recently played out, inclusive of the last week as well. So take us through the entire gamut of starting from gold as well as crude oil and energy, and also even as far as industrial metals are concerned, because off late we've seen some kind of a cool off from the very sharp up move that we've seen before that.
So I think consistently we don't really have, and we never express any views or any price sort of view that we may have on any commodity. As far as we are concerned, our predominant concern is with making sure that we provide a very safe and liquid market. Of course, what happens to the base price does impact the total turnover in the exchange, and that may have an impact finally in terms of our revenues. But in terms of any outlook, that's not something which we are generally sharing. What I may add is that the bullion segment, which did see first, because of demonetization, a sort of slowdown in the underlying industry, and thereafter where we saw very little stocking taking place because people were waiting for the certainty around GST. From our perspective, that segment is now really on its way to recovery. So we see definitely good volumes coming back in the bullion segment, but specifically on prices, we don't really offer any views at any point of time.
No, of course, my intention was not to ask you about prices in the first place. So as far as volumes are concerned on industrial metals and on crude, what's the kind of trend that you've seen? Because on crude, we've seen a lot of news flow associated volatility as well. So that was my entire point.
Okay, so on that one, I would agree that both in crude and base metals, we've seen, especially in crude, volatility has always been higher than the rest of the commodities. We see that. We've seen that because of various policy measures as well. So from our perspective, that is something which we think will continue as a trend. From our perspective, again, fairly healthy that we see some volatility in crude. Base metals, yes, saw a very sharp rally in somewhere around November, December, and that has come off. So obviously that cooling off did impact our volumes. But again, if you compare just within this quarter and between April, May and June, June is looking to be pretty healthy. We are almost coming back to the volume numbers that we had somewhere around October last year. So again, from base metals perspective, we are back to what I would say even keel.
Right. So post the GST imposition, are there any plans of hiking charges in any of the categories?
No, I don't think so at all. GST is a great opportunity for all of us to take care of in terms of coming up with new product ideas. So we will use that as the window to come up with maybe deliverable products, especially in base metals. But we have absolutely no plans to hike any fees linked to the onset of GST.
Right. Can you speak to us about what the market share has been in June up until now?
So I think our market share has been in that range of 85 to 90%. I guess April, May was slightly in the range of closer to the 88, 87 numbers. In June, we are back to 90 plus. So consistently, I think we've maintained that range over the last 12 months now. And that's something which we will strive to, that we should stay in the 90 plus or minus something range throughout this year.
Right. Sir, if you can give us an update on the introduction of options contracts, because we are, gradually, progressively heading closer towards that. So what's the latest that we have on it, and what are the possible commodities on which we can see an initiation of those contracts, and by when?
So I think we are all in that absolute last leg, I would say. We just await the final circular from the regulators, which will detail what the contract should look like. Most of us who are in the industry know what it is likely to be because of all the consultations that the regulators have had within CDAC, with industry, with various sectors. So I think more or less everybody has an idea of what's coming through. In terms of what contract we would launch, I think in what's eligible from an MCX perspective, we believe gold, silver, crude, copper, even zinc in the non-agricultural segment, and then cotton and CPO in the agricultural segment are some of the commodities which we believe will definitely qualify based on the criteria that we are expecting from the regulator. Now, within all of that, which one to go for, whether we will go for one in each, will depend exactly on what the final circular says. So that's really what we are readying ourselves for. From a preparation perspective, I think there has already been a lot of discussion with the participants in terms of how this contract should be rolled out. We had started training programs as early as November of last year. We continue to do a lot more training programs. Of course, we will now tailor some of them depending on which exact contract we are launching. So if it is gold, we will probably have something to do with the bullion segment in terms of the training programs that we are rolling out. So all of the action should be in the next 45 days. We expect trading to start somewhere end of July, beginning of August. in options definitely this year.
All right, Mr. Paranjape, thank you so much for joining us. We're going to leave it at that, and we'll touch base with you later as well. But thank you for giving us an insight as to how different categories are working out and all the volume picture of contracts as well, and also the much-awaited options introduction of options contracts also, as far as the possibilities and the opportunity of hedging also is concerned. So that was MCX for you. But let's focus on another stock that has been quite a rank outperformer ever since the start of the year. KRBL is the one that we are talking about. It has been in focus. The management has given a guidance also of 15 to 20% growth in the domestic business in the current fiscal. What will be the key drivers?